and the ADP leads us into that as well. The ADP also revised down other months, not just the one that they're reporting at this time. And, of course, in the jobs report for March, we saw that the BLS took down several months big time, some of them 6 figures. So I'm thinking we're going to have another weak report tomorrow, and I think the yields will be down. But if I'm wrong, I'll have to reverse it tomorrow, Judge.
I believe that rates are going to rise tomorrow. I do. I think rates are going to rise in the wake of the report. I think the momentum right now is for rates to continue to move higher. There are concerns that I'm seeing. You know, many months ago we had a conversation on this desk regarding liquidity in the fixed income market. Pete was concerned about it. I wasn't. I'm now concerned about it based on what I'm seeing. Take a look at the HYG, all these ETFs tied to that high yield paper. You're seeing significant outflows right now. Now I'm worried about it.
The options market is implying about a 7% move in either direction. That's about $6. And, you know, the average move over the last 2 quarters since the company's been public has been 6.5%. You know, options volume ran really hot today in front of that report tomorrow. Options volume was 2 times average daily, with calls outnumbering puts 2 to 1. But here's the thing. The stock has held 80 really, really well. If you get a move down to the implied move, that would be down about $74 on the downside. That's a few bucks above the IPO. It's going to be new all-time lows. I think you probably have an opportunity to buy it. That being said, sentiment's so poor that I think you probably, if the numbers are in line and the guidance is just decent, I think you have this stock back in the mid to high 80s very quickly. So I would expect movement here one way or another. I'd be a buyer back towards 70 if it gets there.
It's going to be fairly elevated. Right now, you're looking at 1 week sterling volatility at their highest level since the Scottish independence referendum. So obviously, the uncertainty generated by the UK general election should continue, at least in the short term, to prop up sterling volatility, but also keep the pound under pressure, mostly against the European currency, the euro. Right now, the outcome really, in terms of a bullish outcome for the pound, mostly against the euro, would be obviously a majority conservative government. A coalition that is led by the conservative would also bode well for the pound, mostly against the euro. But at the end of the day, it's really fundamental factors that are going to drive the pound against the euro and against the dollar. And on this front, relative monetary policy between the UK and the ECB, or the euro, continues to point to a lower euro against the pound over the longer-term horizon.